All right, traders, good afternoon. This is Christian from Hertz Tribeca Trade Group, and it is October 19th. So, number one, it's the 33rd anniversary of the 87 stock crash. So, we'll talk a little bit about that. I'll try to make it not so doom and gloom, but just, I think, a couple of valuable lessons that we can maybe learn from 1987. So, it'll be kind of fun to go through that. Let's go over today's price action, which is kind of depressing, I would say. This market is it's tricky when we do start the session up as much as we did. Last Monday, remember that we had this big upside day, right? We had the gap up and we kind of went and we added to gains all session long. I think for the most part, right? Until about the end of the day. And, then if you kind of go through the rest of the week, what was kind of interesting was that the NASDAQ was down basically for the rest of the week. Still finished up, but I think the NASDAQ was up, the Qs were up 3% last Monday, and then gave back, a portion of those gains as they sold off every day after that last week. So that makes 5 days in a row for the Qs down. And so this was much different, than last week, and was a little bit punishing, right? If you added some things in the beginning of the day. So let's talk about. I mean, we can't really go back and kind of, if you made some mistakes in the beginning of the day. I made one or two mistakes in the beginning of the day. One ended up being fine. The other one, I'm going to be sitting with a Google call spread for this week, but that's fine. That's why for options, whenever I'm trading short-term options, I only put in what I'm willing to risk. So yes, it'll be a loss, but it won't be a big loss because I size these things appropriately. So let's talk about that. I want to talk about the individual indices first. Considering there was such a big move, the Qs finished down 1.6%, but overall, it just, to me, it always goes back to, again, where the majority of the gains are made in this stock market game. It's in the after hours market, right? So just like we basically closed on the lows of the session today, what might happen in tonight's overnight session? We might actually, make some gains. So the reason why I point this out is, of course, is a couple reasons, and I do this a couple times a week. The majority of the money is made in this market sitting. Not trying to necessarily time every single tick of the market. It's very difficult to do that. If you've got a very detailed process down, you can try to do that, a little bit of that marking timing, but for the most part, sitting is where you're going to get the most gains long term in the market. All right, but there's a lot of different things that we can do in the short term, and like I said, as long as you have a process down, you can trade a little bit short term as long as you're aware of where the alpha is generated, and that alpha is generated in the overnight market, right? So it's not, in my opinion, and you could argue with me about this, but it's not so much day trading. You can scalp and make money day trading, but really the trend is in the overnight market. So that lives up to what it is again, because you have a 2.3% sell-off on the open to the close, right? And when you net that out with the overnight action, down 1.6% for the Qs. Long drawn out answer there to get you to the performance. But again, I think it is notable, and I don't think the other reason why I point this out to people is because I don't think they're that aware of it, right? I think a lot of people want to come in and day trade, and really I find that a very hard skill to be consistent at, because number one, the market just is not there for you. It's not where all the gains are made, right? So you're dealing with a very thin slice of the pie. All right, so let's move on from that. Again, I tend to go on for that for a while because it just is what it is, and it's a principle that a lot of people aren't familiar with. So where are we in terms of S&P, right? We do have 5 red candles now, but the good point here. The positive is that we're basically into support on the daily chart, right? We're coming all the way back into the top of value, right? We bounced there last last week on Thursday, and we have a nice hammer bar. But we're basically we did take out those lows from where we were last week. So we do have this level to pay attention to. That's 3,419.75, right? We're at 3,432 right now. So that's a nice level to watch. The reason why levels are so important is because you can basically maneuver your trading plan around the levels a bit, right? I personally want to be taking more risk when the market breadth is strong, when we have breadth expansion, and we're above short-term moving averages, and we're also above value, right? When we've got some positive trading signals. Now what we have is, and I'll take you back to this, this 200 period moving average is one of the indicators that I have on my chart because it tells me something, right? Every indicator that you should have on your chart should be telling you something. It shouldn't be there for show. What this told me back in the end of September, the trend changed. For the most part, most of September, right? The price, obviously got extended here in the beginning of the month, September. Once we ducked under the 200 period moving average, and you can follow this along with the value areas as well, but we had a tough time, basically reversing this trend. It took just about a month for this trend to be reversed, where price solidly got above the 200 period moving average, right? We did it here, and we were above value, so that lined up nicely. We did check back to the 200 period. All this whole week we were above value, so it was back and forth action, but it was positive. Then for the next week, we rallied pretty hard. I think this was back on. Was this back on no stimulus talks? It might have been, right? When Trump said, "Hey, I'm not doing stimulus plans until after the election," right? We saw this move happen. Note that we did break into value, but we held this 200 period moving average, and then since then, right, since that point, we rallied for basically about 2 weeks. And then kind of slowed down a bit, after Monday of last week. Came back. We checked back into last week, the top of value, held the 200-day moving, the 200 period moving average. But now we've got something different, right? All this time we're basically been above value each week. Now, the beginning of the day we started off okay. And I did say, in the weekend video, watch these levels. They're going to tell us what is in store for us this week. So we've broken this. Notice how just like last week, the 200 period and the top of value came close to lining up. It also kind of coincided again for today. So we've broken below. And now we've got some other things to worry about. We are bouncing again because there's some headline about stimulus again. But so we're bouncing here a little bit in the after hours. But we basically there's a decisive break of this, right? And this will basically on the 1 hour chart will tell you where the trend is, the short term trend. So if you're trading more short term, this is something to pay attention to. If you're paying long term, you don't necessarily have to follow along with what I'm saying here on the 1 hour chart. But if you're a short term to medium term swing trader, the 1 hour chart helps me a lot to kind of figure this stuff out. So going back to some trading signals, right? We are considering that we're below value. That kind of means risk off to me. Does it mean I have to stop trading? No, we could do things like we could rally, like in this overnight market, who knows? We could rally all the way back up here and we could get rejected, right? Now now it's a counter trend trade, but there's going to be some things that are going to take place. And I don't know if that happens in the overnight market. I'm just guessing that we do some type of retracement. But we could fail here, or we could regain it, and so we just kind of have to see what happens back at 3468. For now, we know that we've broken this short-term trend, and we have to watch out for. We did find support at this 3421 level, but I think this 3396 level is going to come into play at some point. I don't know when. And if we do get back above value, inside value 3468, we don't have to worry about any of this stuff down here, right? All these things become active once we're below value, and that's why we have to pay attention to it. So notice also on the 5 minute, there's also gonna be a virgin point of control down here. I'll just wait for the chart here to adjust for a minute, but boom, there it is, 3395, right? So that's pretty close. This 3395 is pretty close to this 3394 level. All right, so that is something that you might want to consider in your trading, that there's a level of high volume that we have not revisited um, previously, so it could come into play. The other thing to note, it's a good visualization of these virgin point of controls, right? Notice the one that we took out today, which I was saying in the trading room, I was like, all right, we're getting close to this thing. I kind of saw the writing on the wall after the first half hour of the day. Once we started slipping and there was very little bounce, the bounces kept running into the 20-day moving average. Like here, I was like, oh, well, that's a failure. The next one we did was just didn't have any energy behind it, right? And then you could see bigger red candles. Usually, when you see something like that, you know that you're in a downtrend for the day, right? There might be some pain to go through the day. So notice what happened here. I was like, okay, well, maybe we'll halt on this 5 minute VPOC. And I'm basically, all along, I'm not really doing much. I'm just kind of watching to see what price action does. But we took this out and there was no bounce, right? That's usually not a good sign, right? Sometimes we can go a little bit lower than these virgin point of controls and then bounce back. But notice that there was nothing, right? We have this little bounce back. We didn't even get back to this. So again, these things are kind of hints, right? They're not 100%, but they're a little bit hints about how the day is going to go. This kind of can helps me in particular, because I could tell you sometimes I have a habit of buying the dip a little bit too early, right? And I didn't really do that today. I tried one or two things at the end of the day, and I'll show you the trade blotter for the day. But it helps me stay out of these types of things that we're going through here. I know it's a little bit hindsight 2020, but you could see what I did for the day, and they help me stay out of trouble. Right, so that's why I'm kind of mapping this out for you in terms of what we see lower and what we see above. Right, we could bounce. There's no doubt in my opinion that it could happen, that we could bounce up to here, but we're going to have a tough time getting back above it, and it may take a little while. Right, so again, what this means for me in terms of how I want to be positioned is a little bit lighter now that we have broken a trend. Okay, because we talked about this in the weekend video, basically saying, my prediction, which I don't like to make short-term predictions, but I said, hey, we got a lot of things going on the next couple of weeks. And I went through charts, and I just wasn't finding out a lot. I wasn't finding a lot of names that were jumping off the page to me. Every weekend we do I put together a watch list, and this is the thinnest watch list that I put together probably in about 5 weeks, maybe even more. There just was not a lot of things. A lot of charts look similar to me. Like for example, I'll show you a couple of them, like a PayPal, right? Just not showing, and we went over this too in the 1 o'clock hour. I said a lot of these charts look the same to me. We got to break. They're above value, but they're not showing any oomph to them, right? They're not showing any power. So I basically, I still have trades on. I haven't really didn't. I took some trades off on Friday, but today really not so much. I kind of slimmed down a little bit on Friday. So that being said, I will kind of show you what I did for the day, and then we'll talk a little bit about some sectors and some things that you may have your eye on. But yeah, I mentioned this Google trade. That's done. I also day traded some team. I was looking for some follow through from what we saw last week. Analysts upped their price target raises. So I had an itchy trigger finger getting out of this trade because I could see what was happening with the market. It was holding up fairly decently, and so I got a little bit this type of thing I call a little bit of luck, because this thing held up. And yes, the observation out of this is that team is showing some pretty good relative strength, up 2.7%. Maybe a name to kind of keep an eye on tomorrow. I do like what's going on here with this name. It has been kind of in a trading range for a while, but still, I think it's a tough tape. So I'll revisit that name tomorrow. I got out of this trade for small profits. Again, I was happy with that because, when you see the tape react like this, but yeah, out of this trade, I added to it once and then was able to get out. 2 o'clock, I got into a Netflix trade. I thought Netflix was trying to kind of turn around for the day. And I kind of screwed up a little bit. I wasn't paying attention to what was going on. Uh, oh, this was after the Q&A session, so I can't blame it on that. But you had this little bit of a bounce here. Nice 45-degree angle up from this morning after version point of control being taken out. Came back and retested the bottom of value. So that's where I kind of tried this trade. But the market was just too weak, right, and brought this down. And Netflix was actually not showing relative strength here either. You had one retest to try to get back into value, and it failed. So, yeah. So that's that. As a reminder, Netflix reports tomorrow after the close. But, yeah, I was looking to see this thing maybe rally a little bit or maybe run into earnings. But I think tape was just a little bit too weak. And that's basically it. I added a little bit to crowd, to a crowd swing trade, longer term swing, not longer term, but swing trade where I took a profit on Friday morning, I believe. Right, I originally got into this trade around 143, took some off at 148, and I'm back in here at 143 into a little bit of support. So that's it. You could see this is low trading for me. I just, like I said, saw the writing on the wall. Look at how much I traded on Friday, and this is kind of the normal activity. Notice I was selling a lot on Thursday and in the beginning of the day on Friday. Trying to pare down some risk, and then of course, force myself out of some trades late on Friday, which I think was good to do. Right. So that's kind of just to kind of progress through this. If we are breaking trend, and I want to go over the cues as well. I basically just pare down some risk and wait for when the climate, the investment climate gets a little bit better. But you got the same thing here in the cues. You also have, price has been above this 200 period moving average, since basically back, at the end of September. And this is the first real decisive break. The last time we broke this, notice we found bottom of support for the week. Bottom of value, which was support for the week, and we rallied. So, for now, I think the price is kind of confirming all these headlines, right? We know that the next 2 weeks are going to be busy. We don't know what the hell's going on with the stupid stimulus that these. It's not stupid stimulus, but the way that our politicians are handling this is pretty darn stupid. So whether they get something done tomorrow, who knows? I don't want to get into politics, but they're playing politics into an election, and not putting the people first, and that's, you got to be a little bit pissed off at that. Let's be honest. They're not putting the people of this country first. So without saying different sides, it is what it is, right? People who need the money don't have the money, and that's bottom line. That, of course, is going to be an overhang for what we do on a daily basis for the market too. It's creating more uncertainty, and we don't know how long. If they don't come up with something, it sounds like this week, the beginning. Tomorrow is the supposed deadline. Then we. It's just going to create the uncertainty for this for that situation is going to be greater. Now, Also, look at this thing from the cues that we had drawn in here, right? Inverted head and shoulders. We bounce. I mean, not much of a bounce, right? We held, but now you can kind of see sorry, not inverted, but this head and shoulders actually played out a bit on the short-term time frame. All right, so that's what's going on here. Again, looks like the cues are also rebounding a little bit. Just be mindful about how far they bounce. You got resistance 288.69. All right, and be careful about where you're adding trades. Of course, and I'm talking about my opinion on all of this. I'm not giving out any advice or recommendations, anything like this. This video is for information purposes only. In terms of things that underperformed today, what I noticed in the beginning of the day was some of the value areas. It kind of felt like, hey, we got some value places that are holding up. Things like metals and mining, but they gave it back today, so that didn't play out the way I thought it was going to. That group did outperform metals and mining, but still down on the day, down a little bit less than 1%. The clear winner on the day was pot stocks. So hey, who am I to criticize or make a judgment about the pot stocks? If you have a level to trade with these things, that's most important. The most popular one out of the group, CGC, had a huge day, up 11.5%. Where could these pot stocks get to, or where could this one get to? Because on the daily, right, we had a day like this in the beginning of last week, I think, and a retracement and back at it. So a little bit difficult to see where this is going to go to. You got a resistance level up here at 21.19, and I think really on the weekly chart, that is also going to line up with the bottom of the value area for the year for 2020. So so if you're playing this one, realize that you got major resistance at 21.20. So that's another $1.40 up there. So that's a decent move, right? That's not a bad little trade, right? That percentage change that's about 7%. So, that's something that you could possibly shoot for, but you know that you're going to have that resistance. Notice what happened the last time that this thing hit it. It failed. So, again, we don't know what's going to happen if price is going to be able to get over this hurdle, but you do know that that's a decent resistance level. The other one that's I think is interesting is this. What's the name of this one? I'm getting two symbols confused here. I think I threw this one in here in our chart setup page. Is it GRWG? Is that what it is? Yeah. So this one is different, right? It's a newer name. I would prefer to play this one. I always gravitate towards the relative strength, and I'll give you a nice level if you're interested in this. 1831. As long as it's above 1831 for the week, it's trending higher in the short term. You could also look at that last week's value area where it stalled, which is right around 1920. All right, but I think it's got a shot here, right? Maybe for a second day of continuation. So keep an eye on that. What else did I want to talk about? So that's basically it. I think for me, while the dynamics have changed a little bit in the short term, I want to be more conservative. Also, besides the stimulus, right? I don't even think I got through this in my last point. Besides the stimulus, we also have a huge couple of weeks of earnings. For me, regardless of the technicals, that is not a huge place to add risk, right? And then of course you have this election thing. Now, think of whenever you have one of these events that are coming up that hopefully will just be kind of noise, right, for the market. The thing to think about is who drives the markets for the most parts. For the most part, the institutions. Put yourself in a hedge fund manager's shoes. Is this a time where you're going to be putting on a whole bunch of trades, or is this a time where you're going to basically be limiting or watching your risks around this type of event risk? I would think it's the latter. right? If you're either a hedge fund manager or if you're an investment manager with a big pension that you've got to watch, right? If your job, like if you if you take on a lot of risk and something doesn't go right in these couple weeks, you're going to have to answer to people about the decisions that you made around the election. So, do you want to jeopardize yourself, or do you want to say, "Oh, hey, well, I missed out on a couple percent. I thought it was wise to hedge myself and not put on too much risk." Which do you think is going to be a safer thing for the person who has that job? Unless they're only managing their own money and they only have themselves to answer to. But think about that, right? I get this kind of question a lot about, hey, what do you think is going to happen with this event or that event? Put yourselves in the position of the person who has the money to be pushing around the market, as institutions normally do. Think about what they're going to do in the next 2 weeks. Do you think they're going to be super all out aggressive, or do you think they're going to be a little bit more defensive? Right? That should help you with what you're doing on a daily basis, in my opinion. Now, again, you don't have to listen to me. And again, these are my opinions, but I think that's something that's what I'm kind of formulating, in terms of a plan for the next couple weeks. All right. And last thing that I wanted to talk about, and I don't mean, like, this is not meant to scare anybody, but this is interesting, right? So 33 years ago, October 19th, 1987, the stock market had a crash. This was the 87 crash. If you play this interview, which I find very interesting, because it's Paul Tudor Jones, right, who Bill Griffith is interviewing, and he's giving his opinion as this just occurred, and he's basically saying that you could obviously listen to the whole interview on your own, but he's basically saying, hey, we're in a bear market now. This is pretty clear to see, so on and so forth, right? So one of the smartest guys on Wall Street, if you go back to 1987, well, here's what happened. Right now, I'm on a monthly chart. Right, this is not a daily chart, but this is a monthly chart. Notice what happened here back in '87. Right, it was a crash. This was a big move. However, it moved down into support, and it took a while for it to. It took not actually. It took all the way to August to recoup that level, and then it took some time, but look at what happened thereafter, right? So we talked about as well, sitting in the beginning of this video works in the long term. This is a long-term chart. That worked. That was a good buying opportunity over the long term. Notice as well how the other thing that I think is notable in this chart is how far price was above the 50-day moving average. Again, on the monthly. This is not the daily chart. So if you kind of fast forward to today, again, I'm not making any predictions here. This is not what I wanted to do in this exercise. But every once in a while, we do have a check back to this 50-day moving average, and it's quick and it's fast. This obviously happened back here. Let's see if I can. How do I zoom in here? Right? We had one of these in the beginning of the year. Now it's straightened itself out very quickly. I mean, in a matter of months. So it was very fast. So the bottom line here is, looking at this, again, not meaning to scare anybody, but I think the lesson here is that anything could happen in the market. And you have to be able to, as a trader, as an investor, you have to realize that you can only control what you can control, which is honoring levels, honoring your stops. If things go bad, ever, years out, it could be, who knows. But you have to have a game plan for dealing with when volatility hits. What are you going to do? Right? There's going to be case studies for years about what happened back in the beginning of this year. For me, I'll tell you what helped me, and also what I did last week too. I took money off the table back in January, right? I took money out of my trading account a couple times. I was still down for the month of February, and I was down a little bit in the beginning of the month of March, but I pretty much de-risked pretty decently. I got the pain over with. I think I was holding on to a few small trades in the beginning of March, but once I saw March turn, because I did the necessary steps and had a process in place, March ended up being a profitable month for me. So, there's a few lessons to learn. Now, I also took some money out of my trading account last week too, as I said I was going to do. But that's not going to shield me completely if we do have, another market drop. It's just a piece of the puzzle of the process. So that was done last week. And so that's why I'm kind of going through these translating this into what I see short term and talking about the next couple weeks, kind of planning this out a little bit. Um, could I be sacrificing, by being a little bit more defensive? And again, I'm not really like, all in cash or anything like that. But I'm just being cognizant of short-term risk. Could I be limiting myself by being short-term focused like this in my trading account? Yes, I could be, but I would rather be a little bit defensive, especially now that we have, the signal that I mentioned on the 1 hour chart. All right, so keep that in mind. And there's a lot more to talk about. I've already talked for 30 minutes in this particular video, but by all means, email me if you have any questions. Obviously, if you're a member, private message me any questions. But where I think I have kind of capitalized on, over time and gotten better is being more neutral as things change and not being permit anything, right? I'm a long-term bull, but I'm going to realize when things change in the short term, and I'll know when I need to make adjustments. All right, guys, that's it for today's video. I hope that was somewhat entertaining for you or helpful. Have a great night, and I'll see you guys tomorrow.